Yes, guys. So this is chapter number 2, guys. Unit 3, government interventions to correct market failures as such, guys. In this chapter as such, better in this particular unit, we are going to revise better as to what is the government doing to reduce monopoly power or market power. What is the government doing better to correct externalities? What is the government doing better in case of public goods, in case of merit goods, in case of demerit goods as such, guys? What is the government doing better to provide information for equitable distribution? And also better, apart from all of this, we did, guys, your price interventions, guys. Non-market pricing. So we all know better that market failure occurs when equilibrium output as such, guys, is not equal to optimum output. The difference between these two is known as your loss of social welfare. The difference between these two beta is loss of social welfare. That is nothing but dead weight loss. It is the responsibility of the government as such beta to ensure that there is greater welfare. There is greater welfare as such beta. Social benefits are maximized, social costs are minimized. Understood, sir? Government plays a very important role better in providing physical and institutional infrastructure as such, guys. Physical infrastructure like roadways, rails as such, guys, airways. So providing airports, bridges, all of this better can be provided only by the government, and they are required better for the efficient functioning of the markets. Likewise, government provides you the institutional infrastructure, guys, in the form of legal and regulatory framework as such, guys. Legal framework के वजह से बेटा you can enter into contracts, you can uphold contracts as such, guys. You can exercise ownership rights through regulatory framework like SEBI, guys, RBI, or guys, Competition Commission of India. All of these regulatory bodies as such, guys, are required for the smooth and the correct functioning of the markets. Now government interventions as such, guys, can be direct or indirect. Government directly better can intervene, guys, as a supplier as such, guys, of a particular product, or to provide information. Jaise beta we have seen, now that we have learned the entire chapter, guys, in case of public goods, pure public goods, government only will provide. In case of public goods beta which are non-excludable, government can intervene to provide them as such, guys. In case of again beta non-excludable goods, excludable goods as such, guys, government can provide them with a fee as such, guys. And then beta in case of information, government can themselves provide information, guys. Or guys, in case of merit goods, government can provide merit goods. So yeah, there are a lot of cases beta in which government can themselves enter the market as a supplier. Government can enter the market as a buyer, guys, for procuring goods, just a minimum support program as such, guys, of the government. And then guys, government can indirectly guys, intervene in the market through levy of taxes, through levy of subsidies as such, guys, or through regulations influencing the market. Now as far as government intervention to minimize market power is concerned as such, guys, the first thing better here is to establish rules and regulations. Whatever rules and regulations that you are establishing as such, guys, that should promote competition as such, guys, and it should obviously prohibit any action that is having a negative impact on competition, that is creating a monopoly position as such, guys. So we have Competition Act in India that prohibits actions as such, guys, that are detrimental to competition. These rules and regulations as such, guys, should aim at prohibiting contracts, collusions, predatory pricing as such, guys, The other measures that the government can take better to correct market power or monopoly power as such better is market liberalization, nationalization as such, guys, rate of return pricing. They can have price caps as such, guys, rate of price caps रह सकता है बेटा, profit price regulation रह सकता है. Then they can support customer associations, control mergers and acquisitions activities as such, guys, have certain regulation on imports, as such, guys. Most important point that to be noted here beta is that there can be certain government actions as such, guys. There can be certain government actions that are creating monopolies as such, guys. Just a government has beta this regulation which is patent and copyright law, which will provide as such, guys, which will protect unique innovations. Now this can result in monopoly. Likewise beta we also have natural monopolies, that is in relation to natural resources. Electricity, water beta, where guys, a single player beta will be able to provide the product at a lower cost than beta if the product is in the hands of multiple individuals. Perfect, guys. In order to correct an externality as such, guys, first I said you will have to look from the viewpoint of negative externalities and positive externalities, guys. Negative externalities is we have direct controls. Under negative externalities as such, guys, we have direct controls, those are command solutions. And then beta we have market based policies as such, guys, which is pollution tax. And then we have cap and trade system. For positive externalities beta we have learned the concept of subsidies. Now guys, these market based policies as such beta, the whole objective is to ensure that the producers as such, guys, incorporate the externality in their cost while taking a decision about the equilibrium output as such, guys. Externality के बारे में तो जानते हो बेटा तुम लोग. Direct controls guys, or command solutions beta, is where they outrightly prohibit certain specific activities as such guys, or limit certain activities as such guys to a certain extent. Those are direct controls or command solutions. When you say command as such beta, it is basically the government commanding people as such beta to do this. So you can have compulsory installation of pollution control devices beta in the factory. There is smoking ban in public places. There is ban of single use plastic beta. There is ban of diesel vehicles in Delhi. There is no loud music after 9 p.m. in certain areas as such guys. So all of these beta are direct controls. All of these are direct controls to reduce the impact of externalities. Market based policies beta is to provide incentives guys, so that the self interest of these individuals, market participants as such guys, would automatically encourage them to achieve a socially optimal outcome beta, socially optimal solution. So the objective beta is to ensure that the externalities are incorporated beta and they are factored through the price mechanism. So यहाँ पे beta there are two things: pollution tax, which is Pigovian tax, and cap and trade, that is tradable emission permits. Pollution tax में beta the idea is to tax guys every unit of pollution that is emitted as such guys, and not on the basis of output. Make the polluter pay. When you are levying pollution tax as such guys, automatically the cost will increase. When the cost increases, the output will decrease. Overconsumption, overproduction will reduce. Or guys, the producer will think about alternative ways of manufacturing a product guys, and to bring down the amount of externality guys. So it's an indirect incentive being given to them guys. That is pollution tax. I told you beta India में pollution tax directly नहीं है, but then yes, we have coal tax beta, 50 rupees, 100 rupees domestic coal and imported coal. And also guys, we have say the green compensation charge that is being levied as such guys in Delhi. And then beta we have green tax that is being levied as such guys by the central government on old vehicles now. So these are all examples guys. These are all examples beta. समझ गए sir? And then beta we have spoken about the arguments against pollution tax, that it is very difficult to determine the right amount of tax as such guys. It is difficult to monitor the polluters as such guys. Demand can be inelastic for certain products as such guys, and this is not a genuine solution as such guys, and this can impact the employment and the production levels in a country if these producers shift abroad. Tradable emission permits guys, cap and trade system. Government is basically issuing permits as such guys, which will allow a person to pollute the environment to a certain extent. The number of permits are limited as such guys, so there's a cap on the total amount of emissions into the environment. In case you do not utilize the entire limit, you can obviously trade those credits, and if you are polluting more, you'll have to either pay heavy penalties guys, or you have to buy credits from others. So guys, it works as a two-way system. If you are polluting more, your cost will automatically increase as such guys, and the outputs will decrease. So if you're polluting less, remember you can make money better by selling these credits to someone, so your cost will reduce as such guys. So this will automatically promote these individuals guys to shift to greener technologies, better technologies as such guys. Advantages beta is there's a clear cap as such beta. We know how much is the limit on emissions. You are creating a market beta for pollution, for determining a price for pollution as such guys. It is easier to administer, provide incentives. Consumers will benefit as such guys if these lesser taxes are being passed on better to the individuals. Again beta, disadvantage here is that it is not a genuine solution. For positive externalities as such guys, generally it is in the form of a subsidy as such guys. When you provide them a subsidy as such, better the market prices can increase, but then the output also will increase and reach socially optimum output level. Though the market price is increasing, the outflow from the pockets of consumer is reducing. The difference is being paid by the government in the form of subsidy. ठीक है सर, समझ गए. Other alternatives better for positive externality as such guys is where the government can directly enter the market guys. Government can provide healthcare, education, healthcare and education. तो बेटा merit goods में भी पढ़ेंगे अपन. Environmental activities government can undertake better like a forestation, planting trees as such guys, cleaning waters, जो भी है. ठीक है सर. Then बेटा in this class बेटा we have spoken about government intervention in case of merit goods. I told you what are merit goods. You have to understand the reasons for government intervention and what can the government do. Merit goods as such beta are socially desirable goods. They are good for you as such beta. The consumption of these goods will result in positive consumption externalities, which means beta the marginal social benefit is much higher than marginal private benefit. If only marginal private benefit is considered guys for the purpose of deciding the equilibrium output, there will be under consumption and under production. This is market failure. This is one reason why the government has to intervene. The second reason beta is on the grounds of equity and fairness. Everyone is entitled to education and healthcare as such guys. Government should provide them free. Third reason as such beta is that there is a lot of uncertainty as to the need or requirement of a particular merit good as such beta. Just say you do not know when will you need healthcare services and you might not save amount for it guys. So the government should provide healthcare services. Plus beta people might not have perfect information about merit goods. So what can the government do better to intervene here? Government can have regulations as regulations beta. Regulations can be say cap the prices of education and medical facilities, compulsory vaccination, compulsory insurance, as right of children to education, guys, compel individuals to get vaccinated. So all of these, guys, are regulations. Subsidies, beta, government can give subsidies. This will reduce the cost as such, guys, or increase the benefit being derived by the people as such, beta. Government can directly provide education, government can directly provide hospital services as such, guys, and then but there can be a mixture of services by both government and the private market. These are government interventions, guys. Regulations, subsidies, government can directly provide, and it can be by both government as well as the market. Understood, sir? Free services का impact देखे. Then government intervention in case of demerit goods. Demerit goods beta, socially undesirable products, socially undesirable products like smoking, alcohol consumption as such, guys, and then और क्या बोला, drugs as such, guys. So यहाँ पे बेटा there's a lot of negative consumption externality as such, guys. So the social benefit that is being derived out of this is actually less than private benefit. So they can be overproduction, overconsumption, guys. Here the government will not want that overproduction and overconsumption in case of demerit goods, guys. That is why there will be some regulations. There will be some regulations as such, guys. And those interventions as such, beta, first one is complete ban as such, guys. Or then you influence people, beta, through negative advertisements, prohibit their advertisement as such, guys. Ensure that they are not accessible to vulnerable groups as such, beta, not accessible to vulnerable groups. You can have certain spatial geographical regulations as such, guys. And then, guys, there can be high amount of taxes levied on them, जैसे pan masala, aerated drinks as such, guys, tobacco products, alcohol. But again, beta, the argument against high amount of taxes is that the demand can be inelastic and it is difficult to determine the right amount of tax. Government can provide merit goods, beta, free of cost. Ultimate argument is that only, beta, provide them free of cost. Sorry, minimum price, beta, वो merit good बोला है, demerit good है, sorry. Minimum price, beta, below which such products cannot be sold. Understood, sir? Then, guys, government intervention in case of public goods. As far as public goods are concerned as such, guys, remember we divide public goods as such, beta. First, if they are non-excludable public goods as such, guys, it will always create a free rider problem. And if such goods as such, beta, are left to the market, there will be a case of missing market. So the government should intervene and directly provide such goods, guys. Directly provide those goods. And then, guys, like free Wi-Fi zones. Then, beta, if you have public goods as such, beta, which are excludable, government can provide them by charging a fee or hand it over to private players and regulate the fees that they are charging. Regulate the fees, beta, that they are charging. There can be certain public goods as such, guys, which can be produced and consumed as private goods, but they cannot be left to the market because they can be too dangerous to the society. Example, approval of drugs as such, guys. And then, guys, there is atomic energy. Then, beta, security at airports. And there are certain important public goods as such, guys, that cannot be that has to be provided by government only. Then, guys, price intervention, non-market pricing as such, guys. This is to influence the market outcomes as such, guys. You can have price ceiling, you can have price floors as such, guys. Price floor as such, beta, is basically charging a minimum price as such, beta. Price ceiling is charging a maximum price. You cannot charge more than this. So in case of price floor as such, beta, wherein you have to charge a minimum price, you cannot charge below than this. The demand will be less, beta, the supply will be more. In case of a price ceiling as such, beta, the demand will be sorry, क्या बोला बेटा? In case of a price floor as such, guys, the demand will be less, supply will be more as such, guys. In case of a price ceiling as such, guys, that is putting a maximum price as such, beta, putting a maximum price. If you put a maximum price as such, guys, automatically as such, beta, the demand will be more, guys, supply will be less. This is what you should know, beta. In one case, demand is greater than supply. In one case, demand is less than supply. Yes, sir. Then, beta, we moved on to government intervention, guys, for correcting information failure. There can be strict regulations, beta, regarding compulsory disclosure of information, nutritional information, product compensation, जो भी है, guys. And then, guys, government can themselves provide information as such, beta, and they can be compulsory disclosure of information. Government can regulate advertisements. And then for equitable distribution, guys, progressive income taxes, job reservations, unemployment benefits, subsidies as such, guys, targeted budgeted allocations, land reforms, targeting black economy. Finally, government failure. These are all the things, beta, that we have discussed in this chapter. Pretty simple as such, guys, nothing complicated. Okay, guys. Yes, sir.